Salam TAYTB. Jumpa lagi di One World Outlook Weekly Market Update. Saya Ahmad Enver bersama rekan kami, Bapak Wellian Wiranto selaku Economist dari OCBC Group, siap memberikan informasi dan analisa pasar terkini, global dan domestik untuk membantu Anda memilih strategi investasi terbaik. Hi Wellian, good morning and thank you so much for joining us today on One World Outlook again.
Morning, Amber. Thank you for having me.
Yesterday, we saw Bank Indonesia decided to hold its key benchmark rate at 3.5%. This is despite the fact that major central banks such as the Fed in the US has already increased its benchmark rate by about 75 basis points year to date and signals for at least another 50 basis point increase in each of its next two meetings. What is your take here, William, on Bank Indonesia decision yesterday?
Well, in an ideal world, Amber, I think we have seen BI, Bank Indonesia, meeting the rate hike cycle by the Fed and a lot of major central banks around the world, including from our region as well, with the rate hike of its own. At 3.5% is a historic low, and we're staring at a possible inflation uptick in Indonesia. I mean, as of now, technically the inflation rates of both headline and the core side continue to be well within the 2 to 4% target range by BI, but we see the risk of it picking up further and possibly crossing over to north of 4% in the coming months. Just because we do have supply chain concerns, we do have demand recovery onshore, and we also have some uptick from food and fuel prices that are going to be combining quite a bit to push up the inflation rate in the coming months. So in the ideal world, again, I think BI would have hike ahead of time, hike before the inflation rate pick up further. But to their credit, I must add that BI started to also reduce the monetary policy accommodation in other ways, including by tightening liquidity. Even before yesterday's meeting, they already highlighted that they will be tightening the GWM, the triple R ratio for banks. Before this, but yesterday they tightened it at a much more rapid pace. Essentially, by September, we're going to have the GWM, the triple R rate at 9%. That would likely be, reducing the market liquidity to the tunes of 375 trillion IDR, which is quite significant. So that should help. But at the end of the day, I do think that the case for policy rate hike remains. It's a matter of when, not if, that the policy rate hike will be coming in Indonesia as well.
Maybe you could share with us, so what is your baseline BI benchmark rate for this year?
Well, Amber, our baseline forecast has always been for BI to raise rates by 100 basis points, i.e. 1 full percentage point. That is to say, now we're at 3.5, but we should really be ending the year at 4.5% for BI rate. Now, in terms of timing, our earlier assessment was, if BI were to start early, i.e. even this week, they can then, engender this rate hike in a gradual manner. So moving, hiking one rate in one meeting and then pause and then hike again and then pause, kind of let the market, let the economy adjust to that. But if they were to move the first rate hike later part of this year, obviously we're dealing with a more crunch time period where potentially have to have back-to-back interest rate hikes that there will be dealing a bit more impact on the economy.
I think it is also interesting when we talk about rates, we also look at bonds market. And when we look at the Indonesia government bonds market performance, like the 10-year yield, for example, it has only risen by about 80 basis points year to date, as compared to over 130 basis points in the 10-year US Treasury yield. How do you see Indonesia's government bond will perform for the remainder of the year?
For this year, we still have the savior, basically, of BI, Bank Indonesia being able to purchase not just in the secondary bond market, but as in the primary bond market as well through green shoe options, etc. So that should put a cap, that should put a lid on how high the 10-year yield should go for Indonesia. But the risk at the end of the day is really the fact that a lot of bond yields are rising. You mentioned US Treasury yields are picking up. I know the last few days have seen the yields coming down somewhat to shy of 2.8%, but we've seen episodes of the 10-year testing 3%, for instance. So we live in a volatile world. I think that goes without saying, and we live in a world where market price action can jump quite rapidly. So again, when it comes to building buffer, when it comes to building comfort zone, I think BI could have gotten ahead of the game a bit by raising policy rate just to anchor the interest rate differentials a bit more. But I think judging from the action plan, it does not look like they're something that they're doing right away at this point.
Given the rising and uncertainties, I think it's also important that we look at the Indonesia's external position. For example, just last week, BPS noted that Indonesia recorded a current account surplus of about $200 million in the first quarter of this year, and I think we know that that's partly supported by the strong trade surplus given the uptick in the commodity prices. Hence, I'm wondering, do you still see any upside in prices of Indonesia's commodity, and if so, how that would impact Indonesia's exchange rate, the rupiah, for example?
At the broad level, and we do see commodities staying supported. In fact, Howie, our oil analyst, is looking at oil price potentially testing 150 by year end. So we do have that overarching support for commodities overall. Although idiosyncratic risk for Indonesia remains. I mean, we dealt with palm oil exports ban, for instance. So even if the price does shoot up, we can't benefit directly from that. So there's a bit of that. On the current account surplus, I think it is a good thing that Indonesia continues to post current account surplus, and $200 million surplus is not bad at all. But compared to before, it's actually a bit of decrease. I think Q4 last year we saw current account surplus to the tune $1.4 billion. So even though $200 million is a bit, quite a bit, it's less than that. I think as a percentage of GDP, it also declined from 0.15% of GDP in Q4 last year to now, I would say less than 0.1% of GDP. So the surplus is still there, and it's still supportive of currency. Just that the support is coming less and less, and runs the risk of, again, if our demand continues to be strong, which is a good thing in and of its own. If our consumer demand continues to be strong, it's a good thing for growth. But at the same time, the imports growth will also be coming back, and that would cut back quite a bit of the trade surplus and may result in, again, current account for Indonesia dipping back into negative territory. And that's a bit tricky at a time when capital flow remains so volatile.
I think it's a double-edged sword when we talk about commodity price upswing, especially regarding its risk towards inflation. More recently, Indonesia's inflation rose to 3.4% year-on-year in April, which is already the highest since late 2017. Overall, how do you see Indonesia's inflation dynamics here in Indonesia, and what it means for our GDP this year?
Well, overall for inflation, as I mentioned at one of the questions earlier, it's really the fact that we as a baseline, we need to see the inflation picking up further, closing in on 4%. The risk is that oil price shoots up further, and government may not have the necessary budget to really subsidize at this scale, and forcing it on consumers to basically stomach more of the uptick in oil price globally, passing on to their gasoline prices. So there's always the risk of that happening if oil price continues to shoot up. So that offers a very sort of upside scenario for inflation. And again, I cannot stress enough, that's also one of the main reasons why we continue to see really the case for BI to start hiking policy rate, despite the fact that they already started to withdraw monetary policy information through liquidity withdrawals, through triple R hike. I think the key here is really to anchor inflation expectation, and the best way to do that remains a hiking policy rate.
That will conclude our session today, Wellian. Thank you so much for joining us today on One Wealth Outlook. We definitely look forward to you joining us again soon.
Thank you, Enver, for having me.
Sekian informasi dan analisis kali ini bersama Bapak Wellian Wiranto selaku ekonomis dari OCBC Group. Untuk mengikuti update pasar terkini, Anda dapat mengakses weekly market journal kami melalui link berikut. Dan jangan lupa untuk memfollow kami dengan mengklik tombol subscribe. Saya Ahmad Enver, nantikan One Wealth Outlook berikutnya di minggu depan. Salam TAYTB.